After posting yet another profitable quarter and raising full-year sales forecast, can Palantir's strong stock performance continue to propel this one higher north of over $20? Hey guys, hope you're doing well out there. Today we are taking a look at Palantir Technologies, ticker symbol PLTR. They just reported their Q2 2023 results after the bell. Shares are up roughly 3% in the after hours. There was a knee-jerk reaction sending shares down 12% initially. However, they've paired those losses and the stock is closer to $18.50 in the after hours. We'll dive into their Q2 results, take a look at it from a revenue EPS perspective. They did post another profitable quarter, and as always, jump into the technicals for Palantir. This one has been on a monster move upward over the past few months. Before we jump into today's video, I do want to take a moment to thank each and every one of you that have subscribed to the channel over the past few weeks. The support has been absolutely incredible to see, and we are now on the road to reach 1,000 subscribers. If you are new here on the Stock Study, we look to analyze public companies and determine if they are worthwhile investments by taking a look at the fundamentals, the valuation, and the technical patterns of the stock. With that out of the way, let's take a look at Palantir Technologies. This one has a market cap of $38 billion as it's ballooned since the stock has outperformed the S&P significantly over the past 1 year, up nearly 60%, and year to date almost 3xing, up over 180%. Certainly on every metric you want to put on this stock, whether that's a price to earnings, price to sales, price to free cash flow, Palantir does not trade cheap, but we'll see if that is justified or not. Taking a look at the numbers for Palantir, they reported revenues of $533 million, that coming in line with analyst expectations and was good for 13% growth on a year-over-year basis. Certainly not the high growth we've seen from Palantir in prior quarters. On a non-GAAP basis, EPS coming in at 5 cents per share, also in line with analyst expectations. They did say third quarter revenues will likely be between 553 and 557 million, just ahead of analyst expectations of 552 million. And so taking the midpoint of this at 555, that would imply 16% growth on that revenue side for Q3, which would show sequential acceleration of revenues after 3 years of gradually decelerating revenues. Management did increase full-year revenue outlook to $2.21 billion. This was ahead of their forecast from May. However, this coming in line with analyst expectations of also $2.21 billion for the full year. And so if you take this $2.21 billion and apply it to its current market cap, certainly Palantir trading at roughly 17 times a forward price to sales. So not cheap by any means. Palantir CEO Alex Karp did say that they anticipate becoming eligible for inclusion in the S&P 500 after they report Q3 numbers in early November. To become included in the S&P, you have to show 4 consecutive quarters of profitability, which they would have done by that point. And so inclusion into the S&P is certainly a big deal, as lots of money managers are forced to buy the S&P, and so certainly Palantir would be getting a share of that money. Palantir did lift its forecast for adjusted operating income for the full year up to $576 million. That's up from a previous range of $506 to $556 million. And in this most recent quarter, they did announce a buyback program of up to $1 billion. And this is the first share buyback that Palantir has announced. Over the past few quarters and years, they've been diluting shareholders pretty strongly, and so this buyback program should hope to reverse that soon. Now, I don't expect them to buy shares up 181% year to date. However, this buyback can provide a floor on the stock if it does see large declines. Taking a look at some more highlights for Palantir, they essentially have 2 revenue segments, one being commercial, which are large corporations that rely on Palantir's AI and large language models to gather insights from their data, and the other being governments, both US and internationally. We saw that revenue growth 13% year over year. Commercial revenue grew 10%, and specifically US commercial revenue grew 20%. Palantir does note that customer count grew 38% year over year, and specifically US commercial customers grew 35% year over year from 119 customers up to 161 customers. And so Palantir is trying to increase their market share in that commercial B2B space and diversify out of just government contracts. We saw that government revenue grew at 15%, and specifically international government revenue saw the strongest growth at 31% year over year. I do want to note government revenue accounts for 57% of total sales, and so certainly a large chunk of their revenue is still dictated on government contracts. Palantir did announce a contract from the US Special Operations Command in this most recent quarter that could be worth up to $463 million. And so for a company that did roughly $530 million in revenue for this most recent quarter, $463 million contract is certainly not small for Palantir. However, it's good to know that this revenue is generally not recognized as on a one-time basis, and it takes a few quarters to really be realized on Palantir's statements of income. We see Palantir having a cash equivalent of roughly $3.1 billion, and so for a $38 billion company, having $3 billion worth of cash, certainly not a small amount, and I'm sure they would be utilizing some of this in that buyback. Another thing I did want to highlight was this was Palantir's third consecutive quarter of GAAP profitability and second consecutive quarter of profitability on an operating basis. And so whenever you see a company flip over from being a money loser to now making money on that bottom line, you usually see its stock price rewarded, as there's lots of investors in the market that just stay away from non-profitable companies. And so now Palantir earning money on that bottom line will certainly attract a new level of investors. Taking a look at Palantir's statement of income, we see that revenue coming in at $533 million, good for 13% growth year over year. We see cost of revenue only ticking up roughly $4 million. And so when you raise your revenues in excess of $60 million, but only raise the cost of that revenue $4 million, yeah, your gross profits are going to balloon up to $426 million. Moving down to operating expenses, we see sales and marketing did tick up, and essentially for Palantir's business, they are a B2B business where their main customers are large corporations in the US and internationally, and marketing for these sort of companies is a significant expense. Certainly it's not a B2C type of business that you see out of Google or a Meta, and Palantir does have to spend significantly on that sales and marketing side to attract new customers. We see R&D ticking up roughly $11 million as they invest more and more into their technology, and G&A ticking actually down, which was good to see. All things considered, total operating expenses moving up just $4 million. And so when you raise your revenues by roughly $60 million, your cost of those revenues only goes up by $4 million, and your operating expenses only go up by $4 million as well. Yeah, you'll turn from a loss from operations to an income from operations, as Palantir did just that, producing roughly $10 million in operating income in this most recent quarter. Gaining some interest income and paying income taxes, we come to a net income number of $27.8 million of positive net income. They were reporting roughly a loss of $180 million of negative net income just a year ago. And so Palantir has certainly made strides in the right direction, turning this business from a big money loser to now becoming profitable on a bottom line basis. We see these shares outstanding have been increasing steadily as Palantir has been diluting shareholders, as so many companies that go public do in their early stages. However, Palantir announcing that $1 billion buyback program, you should see the shares outstanding begin to slow down in the rate of their increase. Taking a look at Palantir's balance sheet, looking fairly healthy. They're sitting on current assets of roughly $3.5 billion, out of which 3.1 of those are cash and cash equivalents and marketable securities, so quite liquid. Palantir does have current liabilities of roughly $680 million, and so a current ratio well in excess of 2, nothing to worry about there. They do have some operating lease liabilities, roughly $200 million. However, total assets well in excess of total liabilities. Moving on to the statement of cash flow, we bring down that positive $47 million net income number compared to a net loss of roughly $280 million a year ago. We get to add back in things such as depreciation, amortization, lots and lots of stock-based compensation, as that's not necessarily cash flowing out of the business, although some should argue that should be cash flowing out of the business and shouldn't be added back to the statement of cash flows. They do have a significant amount of account receivables, as the revenue for Palantir sort of trickles in as they might announce a contract this quarter. However, that could be realized in subsequent quarters. We see net cash provided by operating activities for 6 months ended coming in at $277 million. Moving on to the technicals for Palantir in the after hours, I see this one is roughly at $18.50, up about 2.5% where this blue line is. Boy, since May, this one has been on a straight rocket ship higher, up nearly 150%. In terms of levels of support and resistance, I see the first level of resistance being roughly at this $20 range. Mainly that could be psychological, but certainly from a price action perspective, I see resistance at this $20 range. In terms of support, the first level of support I see is roughly where the stock closed at today's trade at the $18 range, as that acted as a level of resistance back in July, and so I can see that being some level of support if Palantir does retest $18. A stronger level of support I see closer to the $16.30 range. Me personally, I would be interested in Palantir south of $13, closer to this $10 to $12 range. While I do see Palantir being positioned strongly in this AI wave and certainly having a market advantage compared to other analytics platforms, I do think the valuation has become disconnected with Palantir's fundamentals, and while this $10 to $12 range seems very far, Palantir was just trading at this range back in May. And so personally, I see the risk reward for Palantir being much better down in this $10 to $12 range. And that's where I believe the valuation of Palantir will be more in line with its fundamentals. That was Palantir for you guys. Overall, a company that has flipped over to profitability and certainly is being rewarded by investors for doing that. I do think the valuation has been disconnected from Palantir's fundamentals at these price levels, and I would be more interested in picking up shares of Palantir south of $12, closer to $10. Let me know your thoughts on Palantir in the comments below. Do you think this is a buy, sell, or hold at these levels? As always, thanks so much for listening, and I'll see you guys in the next video.